When you think of Donald Trump's wealth, your mind immediately goes to traditional concrete assets. You think of massive gold-plated skyscrapers in Manhattan, sprawling golf resorts in Florida, and high-end commercial real estate networks spanning the globe. For nearly half a century, his entire public brand has been anchored to bricks, mortar, and land. But if you look closely at how the actual financial system is shifting, you'll find that the old rules of building a multi-billion-dollar empire have completely changed. The U.S. Office of Government Ethics officially released the President's Certified Annual Financial Disclosure Report. It is a massive, highly complex, 927-page document. While mainstream headlines quickly fixated on political talking points or general stock market gains, the cold, hard data tucked inside those pages reveals something far more fascinating. In a single year, his empire generated an estimated $2.2 billion in total revenue. But it wasn't his famous real estate holdings that drove the staggering majority of this growth. In fact, his traditional real estate business brought in just under 10% of that total, coming in at roughly $196 million. Instead, the true engine of his recent financial velocity was a highly sophisticated pivot into digital architecture, international arbitrage, and intellectual property. Over $1.4 billion, nearly 65% of his reported financial gains, flowed from a sector he once publicly criticized, cryptocurrency. This video is not about politics. It is a strict mathematical post-mortem of a 927-page government document. We are going to look at the exact mechanics of how a modern president structures a digital empire from inside the White House, break down the staggering economics of token licensing, and examine the raw numbers behind his massive corporate legal settlements. To truly grasp how a legacy real estate mogul generated over $1.4 billion in digital asset revenue in under 12 months, we have to look directly at the mechanics of two private entities listed on his disclosure, World Liberty Financial and CIC Digital LLC. Let's look at the first pillar, World Liberty Financial. Launched in late 2024 as a decentralized finance project, the venture generated a staggering $791 million in total reported transactions for the empire. The filing shows this was split across two distinct buckets. Over $550 million brought in directly via the sale of crypto tokens, and another $260 million brought in through selling equity interests in the underlying WLF business itself. But the even bigger driver of liquid cash was the second pillar, CIC Digital LLC, the vehicle behind his meme coin business. This entity alone brought in more than $635 million. To the untrained eye, this looks like speculative trading, but mathematically, it is something entirely different. It is an intellectual property IP licensing play. The disclosure reveals that the $635 million largely originated from a highly lucrative royalty and licensing agreement with a firm called Celebration Coins. The strategy here is genius in its efficiency. Setting up a real estate project requires hundreds of millions in bank loans, years of physical construction, zoning permits, and immense overhead. An IP licensing model, however, has near zero marginal cost. By licensing a high-authority name and likeness to digital token issuers, the entity captures massive, pure-profit royalty streams directly from global trading volume. Furthermore, the filing notes that CIC Digital didn't just cash out, they kept skin in the game, holding at least $60 million worth of various liquid cryptocurrencies directly inside their digital wallets. When you own physical real estate, your revenue is geographically locked to the economy of the city your building sits in. But when your wealth is built on global licensing and sovereign partnerships, your revenue behaves like a multinational conglomerate. This brings us to a line item that most analysts completely skipped over: overseas licensing agreements. The 927-page report reveals that Trump struck $65 million in licensing deals exclusively with several overseas entities. This includes extensive, highly lucrative developments and luxury-branded footprints sweeping across regions like Eastern Europe and the Middle East. But what makes this incredibly lucrative is the concept of geographic arbitrage. The cost to manage and maintain these brands domestically in highly regulated, high-tax environments is incredibly steep. By licensing the brand out to foreign developers who handle 100% of the construction, capital expenditure, and local regulatory risk, the domestic trust simply absorbs a highly predictable, hands-off percentage of top-line revenue. On top of this international footprint, the disclosure also shed light on an entirely separate, non-traditional cash infusion, legal settlements. The report explicitly lists a staggering $88.5 million in cash payments received entirely from major media companies and social media giants. The breakdown lists direct incoming wire transfers from major networks like ABC and CBS, alongside dominant Silicon Valley platforms including Meta, YouTube, and X. In a standard corporate balance sheet, litigation is an expensive drain on capital. But when structured defensively across an entire media ecosystem, settlement payouts can effectively turn legal friction into a multi-million-dollar monetization engine. To understand how this entire apparatus works without collapsing under the weight of immense public and ethical scrutiny, we have to look at the structural legal architecture protecting it. How can a sitting president legally oversee an empire pulling in billions of dollars from crypto firms, foreign developers, and media networks while managing the executive branch of the government? The answer lies on page 1 of the disclosure, the revocable trust. The disclosure confirms that all of Trump's massive assets are held in a private trust legally overseen by his son, Donald Trump Jr., while the broader Trump organization is actively managed by 2 of his sons. Because the trust is legally classified as revocable, Trump retains the absolute authority to amend it, revoke it, or completely swap out the trustees whenever he chooses. While standard executive branch employees are bound by strict ethics laws that completely ban conflicts of interest, the president and vice president are legally exempt from those specific statutes. They are required by law to declare every single dollar and asset via these disclosures, but they are not forced to liquidate their holdings. When we step back and map the entire portfolio, proportionally based on the raw data provided by financial analyses of the document, the truth becomes clear. The numbers don't lie. The stock market's upward trajectory alone cannot account for a wealth surge of this magnitude. This was a deliberate, rapid financial engineering play that converted a standard, illiquid real estate portfolio into a hyper-liquid digital printing press. The 927-page disclosure of Donald Trump reveals a profound lesson about the velocity of modern wealth. If you build your wealth strictly through physical, slow-moving mechanisms, your growth is linear. But if you can successfully decouple your income from physical labor and physical geography, and instead anchor it to digital tokenomics, global intellectual property, and institutional scale, your wealth moves at exponential speeds. The transition from a billion-dollar real estate mogul to a billion-dollar crypto asset holder was executed in just over a single year. It serves as a stark blueprint of how the modern financial elite use digital leverage to scale their net worth faster than at any other point in human history. If you want to look past the media noise and master the actual, data-backed math driving global wealth, make sure to hit that subscribe button. We break down the absolute structural realities of the financial system every single week, stripping away the opinion to give you the raw numbers. Thank you for watching, and we'll see you in the next video.